It's hard to believe, but we're finally done with the month of January 2025. It lasted for a long time because of all the craziness in Southern California, including the LA wildfires. What effect did the LA wildfires have on the Southern California housing market? Plus, what's going on with median home prices and median days on market? We're going to let you know in the Southern California Housing Market Report. All right, time to dive into the data. Got a lot of numbers to cover. Starting off with Orange County single family homes, we're taking a look at sold. We're taking a look at properties under contract. That's buyer demand. We're taking a look at new listings. That's seller supply. And what do we see? Well, we got a whole lot of data now. Now that we're into 2025, going all the way back to 2018, pre-COVID, COVID, after COVID. And we could also say normal interest rates, low interest rates, high interest rates. Same thing would apply. And I'm going to show you the interest rates in a moment to show you how those relate to these numbers. But we can see that year over year, looking at 25 versus 24, that we're up for number of pending sales and we are up for the number of new listings. So things are starting to warm up. It started off slow, not gonna lie. And then LA, we had the fires. Can't wait to show you those numbers. And we can see that the number of sales, the closings that we had, that's down year over year. So certainly a slow time, maybe waiting for the inauguration. Lots of uncertainty out there. So maybe that led to fewer properties going under contract in December to ultimately close in January. So we can see numbers are up, but the gap between the new listings and pending sales has widened, and it's closer to more normal years like we had in 2020 and before. So interesting to see. We'll have to see how it plays out. Anecdotally, we're seeing the market heat up. Suddenly multiple offers on properties and a lot of buyers out shopping. So it does look like the market's about to thaw. All right, you number nerds like me, you're gonna love this. We have taken the mortgage interest rate, averaged it for January. These numbers come from Freddie Mac, and we've overlaid it with these numbers so you can see. Again, this is an average because during the month of January or any month, mortgage interest rates could potentially go up and down. So we can see back in 2018, we were at 4%. It ticked all the way up to 4.5%. Wow, crazy high back in 2019. And that reduced the number of properties going under contract. Then things got crazy. Yes, 2020 in January, just before COVID, interest rates were in the threes. And we could see it was a busy time for properties to go under contract. Well, what's another way to get a bunch of properties under contract? How about you drop mortgage interest rates below 3%? 2.75 in 2021 in January. And you can see subsequently tons of properties going under contract. Then they went back up. Oh my gosh, all the way to 3.5% in 2022. And it killed the market. Things started to slow, believe it or not. How many of us look back at that right now would have bought every possible thing we could in January of 2022? Now, mortgage interest rates at that point in time started to go up dramatically because of the war with Ukraine. And then the Fed started to increase the Fed fund rate, not directly related, but part of the equation. And we can see that mortgage interest rates have been through the roof since. In fact, this January that we just went through, when you average it, higher than previous January's. Real nice gift for those looking to buy and sell and for real estate agents and mortgage brokers as well. Not easy out there with these high mortgage interest rates. And you can see that even with the high mortgage interest rate, so about double of what we had in 2022 at this point in time, there still is a healthy number of pending sales and the market keeps moving. Hopefully we get that drop in mortgage interest rates. Racing through the data, take a look at Los Angeles. Now, very, very sadly, the month of January, a terrible month for Los Angeles. About 16,000 homes and have been lost due to fires. Very, very sad. We can see though, despite the fires, and the fires basically took up about 3 weeks of the month, we still have an increase year over year in pending sales. And we have a big increase in the number of properties that have been listed going to more normal levels like what we had in 2018 to 2019. So that's a big increase in the available inventory. And it'll be interesting to see how this is going to affect prices because there's two sides to this. So we could see, actually, some are saying we're going to see an increase in prices because of high demand and low inventory. But if you look at this, it looks like there could be a drop in prices. So who knows? All bets are off. We haven't experienced anything like this in a major metropolitan area like LA. So again, our hearts go out to all those who've been suffering through this. We've released other content to help those folks as well. We will have to keep tracking what is going on in Los Angeles because these numbers, Riverside, all right, are you noticing a trend in new listings? We've seen it so far in all the counties we've looked at, and that is a year-over-year increase. In fact, here we're seeing more inventory than we've seen. You have to go all the way back to 2020, the normal times, just as COVID was about to hit the United States, where we had the same amount of inventory. Pending sales are up year over year, but not as strong as they were back in 2020. So we have that widening gap between the number of new listings and pending sales. We will see how it plays out as we get into the typical spring market. There's some people who say that nothing happens till after the Super Bowl. It drives me crazy because you can see stuff happening in these numbers. We'll have to see what happens after the Super Bowl. San Bernardino following that same trend, up for new listings, actually down year over year for pending sales there. So that gap is widening between the listings and pending sales. So interesting to see in the different areas. Now Ventura always marching to its own drummer. Big increase in inventory for there. But look, 678, not a ton, but because there's fewer properties, that's an increase. And then we can see this is a drop in the number of pending sales. San Diego increased, like we've seen, in the amount of new listings, and down slightly year over year for pending sales. It's probably going to be a wash because some agents are late in putting in their pending sales. So we may see that number increase a little bit and get closer to last year's. So that is what we have going on for single family right now with those lovely high mortgage interest rates. You told me you wanted me to keep these numbers, so we're keeping them in here. Here are the multifamily numbers, and this is one of the only places you're going to get these numbers. Looking at Orange County, we can see that inventory, just like last year at this time, has gone through the roof. A lot of new listings. This year is stronger from the pending sales standpoint than last year and way better than 2023. It's almost 2022 levels of pending sales. What's interesting about that is if you remember the mortgage interest rates, in 2022 we were at 3.5%, now we're at 7%. And the function of cash flow is all the expenses minus the debt service. So it's very tough for properties to cash flow right now unless the prices are low enough or the down payment's big enough. That's the other way around that. So very interesting to see the solid multifamily market. Now, LA, it wasn't just single family that got hit by the fires. There were multifamily properties lost as well. But we see that same trend that we saw in the single family data, which is a big increase in the number of listings, very similar to more normal years for the number of listings. And pending sales are up over 2023 and 2024 levels, even as mortgage interest rates are up over those levels. Riverside multifamily tends to be a more affordable market, higher cap rate, slightly better return for the investors who are buying. Inventory is up, just like we've seen in the other counties, but an interesting drop year over year in the number of properties going under contract. So 2024, it spiked up from 2023 levels, and it has since dropped. So I've seen this before in the Riverside multifamily numbers. We'll have to keep tracking them. You'd think it would be more solid because of those cap rates. And this is another market that's also affordable. San Bernardino, slightly higher cap rates here typically. Inventory dropped. So it's one of the few spots we're seeing the number of new listings drop year over year, and pending sales are up year over year. So different tale in San Bernardino versus Riverside, Ventura. Look at that, very consistently, past few years, 6 new listings, and the number of pending sales down slightly. But when you have so few properties, it's tough to extrapolate much. And then look at this huge increase in San Diego multifamily listings. Big, huge increase, record high in this data here. Pending sales pretty consistent, even as mortgage rates went up and down. But that is a big gap. There's a lot of choice right now out there if you are looking to buy San Diego multifamily. Lots of inventory on the market. So this is one to keep tracking. Not quite sure why the spike just in San Diego. You guys have any ideas on that? Let me know in the comments below. Oh, median home price madness. I don't know why I call that. It's just kind of fun, and it does make some people angry when they go through these numbers, and there's madness in these numbers. So here we go. We can see that the month over month change in the median home price. LA actually went down, and I don't know if it's due to the fires, but median home price went down. It dropped slightly. Orange County, that's a big increase in there, and then a slight increase in Riverside. So this is a time of year where things are going to start to change. We're going to see the median home price go up, and you can see the year-over-year increases in median home price, 5.3 in LA, a whopping 11.1 in OC. That needs to slow down. We can't continue to have these big increases. You've heard me say that for several years now. And Riverside County, 5.2% year over year. And then looking into San Bernardino, Ventura, and San Diego, those three increased month over month. Again, December being the slow time. We then get into January. We should see an increase into February, all the way through about midsummer, and then it should go the other way. Depends on what happens with interest rates. And then year over year, San Bernardino, holy cow, 10%. There were times when these numbers were negative. If you've been watching these reports I've been doing, these were negative year over year. Ventura, a whopping 0.5%. So that did not outpace inflation. San Diego, 5.4%. There is your median home price madness. If you're digging our data, you're our kind of people. Make sure you reach out before buying or selling real estate in Southern California. Altos Research Reports, you're silly. You're just simply silly if you have not subscribed for these. You can subscribe on my channel and get any of the data we're covering here. You can put in your own city and zip code if you want. You really should subscribe wherever you're looking. So we're starting out at the national level. We're looking at the national numbers. And what I want to look at is the median days on market. So how quickly things are moving, because there is a trend here that you will see in the market. And I'm seeing, and I mentioned that the anecdotal trend, it shows up in median days on market. So if there's less demand, things take longer to sell. So your days on market goes up. And you can see that it's reflected on the national level. You got the spring buying season, so things start to get snapped up. You get into the summer, and then things start to sit into the fourth quarter. And where we are is usually about the longest time on market, December and January. And you don't have to tell me that, because my house is on the market. Now, what you're seeing here at the national level is it's still up. And it's higher than it has been. You have to go all the way back to 2020 to see a similar amount of days on market. Everything else was lower. We're not seeing it having turned yet. But here's where things get interesting. Moving into Orange County, look what we have here. Things have changed. So we had our peak. This isn't a shocker. You can see in years past, this is typical. But we can see that this market has started to heat up. Buyers are out there writing offers, and it's down. Now, it's not as low as it was during 2021 when we had crazy low interest rates, but the days on market, that median is actually down below some other years like 2023. So that is why we're seeing, like I said, anecdotally in Orange County, things are heating up. Los Angeles, again, the fires have changed things there, but we saw in the data there's still quite a few pending sales, and we can see in the days on market that that's dropping as well. Even during the fires, we had things turn, and days on market was decreasing. What's interesting to see is that we are still at a higher level than where we were in a more normal year in 2020, but it's been higher. It was higher in 2023. But what's important to see is it has turned, and we will continue to track this and see if it drops like it has every other year at this time. Riverside, similar thing. We've got that drop. That market has turned. Nowhere near these crazy low days on market. Look at that, 14, and back here it was even lower, 7. Everything gone in a week. But it has turned, and we'll have to see if it continues to turn for Riverside. San Bernardino, interestingly enough, it turned and then it went back up. This is one of the longest days on market times, and it looks like it's the same as it was in 2023, and it is definitely higher than where it was during more normal years. So interesting to see. It looked like it had turned and then it went back up. Got to see what's going on in San Bernardino. Ventura, now we saw that drop in the number of pending sales and the increase in new listings, But we saw a big drop. Look at that. Just a few weeks ago, 70 days on market. Now we're at 49 for the median. And this looks good compared to years past. So days on market are lower, even though we have that big disparity between the number of new listings and number of properties that are going under contract. New versus absorbed, we can see that we're still higher on the number of properties that are absorbed. In San Diego, another one where it's turned, it actually looks like it's flattened out, though. The past couple weeks had 63 days on market. So let's see if that continues to drop. You can see these big drops in years past. Right now, we're where we were, same 63 days on market as the 2020 numbers. So interesting to see. You gotta make sure you subscribe to these and subscribe to our channel so you get these updates. This is gonna be a pivotal spring. Let us know in the comments below where you think the real estate market is headed for 2025. Are interest rates gonna finally drop? I want your predictions. If you sign up for those Altos Research Reports, you're gonna get a bonus, and that is our free weekly email newsletter, gently delivered to your email inbox every Sunday. And the algorithm thinks you need to see this next video right here. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we can't wait to help you.